9 p.m. on the nose. 9 p.m. Tuesday, February 21st. Hey everyone, how are we doing today? James Gardino here at the 10-Minute Trader, and money makes life easier. Now we're investing for dividend cash flow. Now, dividend cash flow is a strategy that I've been trading and I've been teaching people for a while. Because people face it, let's be real. Everyone has monthly bills. We have monthly obligations. So what better way to fix that than take your investments and make it safe, secure, in a way that you can get returns on a weekly or a monthly basis using your investment portfolio along with some dividend capturing. Dividend capturing has been around for over 400 years. That's where the company shares a small portion of their profits with the investors. So if you own the stock, you're eligible to get some of those profits. Now, they do this 4 times a year for the most part. Some companies do it once or twice, but for the most part, most of them do it 4 times a year. Now, today is February 21st, so let's just jump into it and show you what I did this morning. Now, I took the day off yesterday for some strange reason, and I don't really know why, but let's see what I did this morning before I went to work. All my trades are usually first thing in the morning. I set them up the night before or the morning of, and then see where they go. So today's being Tuesday, this is what we did. We bought contracts for vertical spreads. Now, I do a lot of option trading in conjunction with the dividend. Why? Because the dividend affects the direction of where the stock is going to go. How do I know this? I created some nifty little software that tells me exactly what it is. Still trying to get over this cold. If you've been watching my videos for a while, you'll notice I've had this for quite a while. It's kind of strange. All right, so here we are, Tuesday the 21st. This is what we did today. We opened up first thing this morning. All right, look at this, 931, 931, 931.01, 931.01, 931.17, 931.48, 932. And then this one took a while to fill, this one took a while to fill, and this one didn't fill at all. Okay, so let's take a look and see what we're looking at. Okay, TJX. Now, we owned TJX for a while. We had 100 shares left over from last week. Let's review the trade. All right, so we have 100 shares. We sold 100 shares at 75, which means we're short. So now I have to turn around and rebuy them. So why am I trying to, if I sold them at 75, why am I, okay, I'm trying to buy them at 76. No, I'd be losing. All right, so let's change this one real quick. Let's replace that. Let's go. Just plain on 75. Confirm and send. All right, that doesn't change anything. So let's go back here. We changed that one, so now we're waiting to get that one. It's a changed order. Okay, I'm going to be blowing my nose every once in a while. Excuse me. Excuse me for that. I have to thank my child for that one. All right. Here we go back at the very first one. We got filled MRK. So MRK is right here. MRK started the year last year at $50.30. Nice move right up till beginning of August. Then she had a gap out from 58 right up to 62. Gone sideways for quite a while. Ended up to where we are now at 65.48. Okay, now MRK. We got the 64 and a half, 65. So that means as long as the stock stays above 65, we're going to be in profit this week. Okay, and I'm pretty sure it was a little bit over 50% profit, which is nice. Oh, 50% profit for 3 days. I can deal with that. Okay, that one looks like it's going to work. Let's start from the very top, work our way down. Okay, Bank of America, let's take a look at the view of the trades. All right, 2,000 shares. And we also have some puts at 24 and a half puts with Bank of America, BAC. Okay, now BAC, which is Bank of America, started the year off right at 12. Got sideways for a little bit, right up until towards the end of June. Went up until right around President's Day, right around the election. November 7th, November 8th. Then the thing jumps all the way up to where she is now at 22, almost 23. Now she's at 24.78. And what do we have here? We have view trades. All right, we happen to have 2,000 shares at 24. So let's sell those. And we have 24 and a half puts. That's for this coming up Friday. All right, first of all, let's get rid of the stock because we had that left over from last week. We sold some options on that. We collected, I think it was either 30 or 40% on that one. And now we're going to collect a little bit more because we have them at 24. Okay, I have at 24 and it's at 24.78. So let's just create a closing order. 2,000 shares at 24.73. That looks good for me. And it's going to cancel. That way it gets filled right where it's at. All right, so we made a few bucks on that one. Oh, this is terrible. All right, that was Bank of America. Let's get rid of that. All right, CME. We're looking at 121, 122 calls. CME group. All right, CME starts out at 92, goes sideways for 5 months, right into the end of June. Then from there, she shoots up to 110. A little bit of profit taking back down to 100, a 10% move. And right towards the end of October, beginning of November, just before election, this thing shoots up from 99, hits a high of 124, and goes sideways to land us where we are now at 121.05. Now CME, we got the 121, 122. All right, so we only have 10 contracts of this one. So if the stock stays above 122 by the end of business on Friday, we'll just collect that profit. However, she dropped back down to 121. Does it have a chance of hitting 122 or higher? Yeah, it's got the dividend coming up in 10 days. And that usually drives up the price anyway. So we get the dividend coming up. We collected some premium last week because we sold this last week. No, wait a minute. That was Bank of America. Sorry, CME. We didn't sell any of those. So we're looking to keep this thing above 122, and that will give us a nice little profit. I think that was only like a 20 or 25% profit for this week if it stays above 122. If not, then we have to buy 1,000 shares come Monday. All right, ENT. ENT started the year last year at $9. Had a little drop all the way down to the end of June, dropped down to $6.39, went back up to the trading range, back up to 9, sideways for a little bit, and then slowly sliding down to where we are today. All right, so this is not looking good at all. Yesterday she closed at 623. Some strange reason, this thing opens up at 589, which is a lot lower than she was. But she drops all the way down to 422. What's with that? We have ET. We don't have ENT. See, it says ENT. All right, now we have ETN. Sorry about that, folks. So I'm going to correct that. ETN. There we go. All right, ETN started the year at 56.73. Nice little move. It took about a month for it to hit 63, almost 64. Went sideways right up until August. From there, she starts going up. And we're landing right at 71, almost at 72. So ETN, we have the 71, 71 and a half calls. Okay, that means it has to stay above 71 and a half for us to stay profitable. Now she's at 71.89, so that's a good sign. Most likely she's going to stay right where she is. It would be nice, but they also, remember, they get the dividend coming up in 10 days. So we want to buy the stock anyway. But what was great with the option, we can make a 25 to a 50% profit if the stock stays where it is, goes up, or even goes down a little bit. Because remember, we sold the 71 and a halves. Okay, so if it stays below 71 and a half, we have to buy it. If it goes above 71 and a half, then it's like a 50% profit, which is great. But right now she's at 71.89. So the chances are it's staying above 71.50 is pretty good because you get the dividend coming up, and this thing has historically gone up just before the dividend play. Okay, that's ETN. The next one is Hewlett Packard, HPQ. Now, HPQ, or Hewlett Packard, started the year out at 10.44. Not this year, but 12 months ago. So 12 months ago, it was at 10.44. A nice upward trend. You got profit taking here, upward trend, profit taking, upward trend, profit taking, upward trend, profit taking, to right where we are now at 16.14 or 16.13, where she closed today. Now let's see what we have Hewlett Packard at. Open up the view of the trade. The 15 and a half. This one is basically, wow, it's got a long way to go for it to lose. So that one looks like we're going to be into money on that one. I like that. So it's like almost guaranteed. So it could stay the same, go up, or even go down. This thing can even drop almost a whole point, almost a whole buck before it calls us out. That's a good one. I like that one. All right, IP, International Paper. Let's take a look at IP. Okay, IP started 12 months ago at 33.88. Nice move. It's a $5 move up in the end of April. Sideways for a little bit, going up to the end of the summer. Small bit of profit taken to the end of October, straight up, and well, we're trading right around 52. We're at IP, so let's see what we have for IP. International Paper. Again, we need to sell this because we have yeah. All right, so we have 2,000 shares, and we also have 20 contracts. Okay, so 20 contracts are at 51.5, 52. Right now, she's at 52.76. So this thing has to drop below 52 before we lose any money. And while I'm here, we bought this at 2,000 shares at 52 because most likely we sold some options last week, 20 contracts. And we got assigned the contract, so we had to buy the 2,000 shares Monday. So now it's above 52, so let's just get rid of them. We made 76 cents per share, 76 times 2,000. I don't know, that's almost $1,500. It's not bad for 2 days. At least I don't think so. All right. So we have a nice little profit with IP, so let's get rid of them. Closing order, get 49. Okay, the last trade was at 52.76, so let's trade that to 52.76. Good till cancel, confirm, and that's on its way. Now let's take a look at that one again. IP. Okay. All right, so we have 20 contracts. We bought the 51.5s, and we sold the 52s. So basically that means, like I said before, all right, We bought the 51.5s and we sold the 52s. So the stock has to stay above 52 in order for us to stay profitable. And we got, what, 3 days left? We got Wednesday, Thursday, Friday. So 3 days. If this thing stays above 52, then we make our nice little 30 to 50% profit, which is good. If not, come Monday, we'll own another 2,000 shares. If everything goes well, we'll be out of the right here. See the 2,000 shares here? Should be first thing in the morning. We should be out of those. But we'll take a look again just to make sure. We'll look at it first thing in the morning. Okay, that's IPM. Let's take a look at Macy's. Macy's seems to be all over the place. She started out 12 months ago at 40.82. She hits a high for the year at 45.58. Then she sinks with a big gap down here in the beginning of May, and she hits a low of about $30, in the middle of May. She goes up a little bit sideways, hits another high right around November 22nd, 45.54. Then she drops back down to 36 before a huge gap down again to make the low of the year right around 28.55 to settle right where she is now at 32.29. Now Macy's, we got the 31.5. Macy's, we got the 31.5 32s. Okay. So the stock has to stay above 32 in order for us to stay profitable. Now we're above 32 now, and we're a decent amount above 32. We're at 32.29. Excuse me again. Oh, wow. It's just like a faucet. It doesn't stop running. My goodness. Okay, so it's got to stay above 32 for us to make money. So that means it can go up. It can go sideways, which means stay right where it is. And it can even go down 29 cents, and we still will be in profit as long as she stays above 32 by the close on Friday. Okay, so that looks like it's good. Macy's. It also, anytime I ever show you anything that I have here, they have a dividend coming out. How far? I don't know. We already did MRK, didn't we? We already did. Oh, we'll take a look at it again. Why not? MRK. Starts the year up 50, a nice climb right up until August 4th, and she's a big gap up from 58 to 64, goes sideways, and she settles right around 65.48. MRK is, all right, the 64.5, 65s. Like I say, this is another one. As long as she stays above 65, we're in the money. All right, get out of there. PAA. Plains All American Pipeline. Oh, we sold that one today. Okay. Now, last week we sold the spread option on it, and we got stuck buying it. Now, do I really call it stuck buying it? No, not really, because we ended up buying it at 31 because we sold the 32. Wait a minute, we sold the 30-31 spread on it, made anywhere between 30 to 50%. For the week last week on that one trade. Did it work out for us? No, we ended up buying it at 31. What happened now? We turn around and we sell it for 31.31, which is a lot better than collecting the dividend, because I don't think the dividend was that high. All right, so we got out of that one. Profit, I like that. MRK, PAA, we just did PAA. TJ Maxx. We got TJX. Let's see what we got there. TJX. Okay, TJX 12 months ago was at 26.08. She goes sideways for a couple of months and then drops to the year low at 21.13. Goes sideways again right until September. Then from September, she jumps from 23 all the way up to 31. From 23 to 31, what is that? That's a $8 move. That's a nice move. That's a 25% move for that one and a half month period of time. Okay, she goes sideways for a little bit. She settled right where we are now at 30.37. Okay, let's try this again, because that says TYX. We want TJX. TJX. So let's try that. Okay, let's try this again. TJ Maxx started the year at 72.41. Basically goes all over the place, up to 79, back down to 72, up to 78, down to 72, up to 83, down to 74, up to 77, down to 71, up to 79, down to 75, up to 77, down to 73, up to 78. This is what you call a channeling stock. It kind of stays in between that little range, so you can buy it, sell it, buy it, sell it, buy it, sell it, as if you're into channeling stock. Not me. I just want to get in, get out, get my small little profit, and hit the road. All right, TJ Maxx, we have 100 shares of that. Now I'm going to sneeze. My goodness. Wow. I really don't belong up here in North. I like the nice warmer weather down in Florida. Be nice when I get back down to there. All right, so we have 100 shares of TJ Maxx. We're trying to get rid of that. Wait a minute. We shorted 100 shares. So we have to buy them back. We want to buy them back less than 75. So we got that working. And let's go to the next one. UNP. UNP. Okay, UNP. A year ago starts out at 79.98. It's just about 80. Goes sideways for about 2 months. At 79. Some a nice little profit up to 88, back down to 80, up to 90, back down to 81, up to 95. Goes sideways for a little bit, and she's settling right where she is now. All right, don't know what went on there. But anyway, she's at 109.67 now. UNP. We got 20 contracts. The 108's 109. So as long as she stays above 109, we're in the money on that one. And we got 67-cent move. So this thing's going to be probably another good one that we're not going to lose money on. Now, Yum Brands, we're not doing too good with Yum. Yum starts the year out last year at 51.36. I tell you, constantly doing this all day long. It's driving me nuts. All right, like I said, she starts the year at 51.36. Nice uptick all the way to 61. What was that? From 50 to 61. That's a $11 move. That's nice. Goes sideways for a little bit, right into the end of June. Goes up again to 63, almost to 64. Goes sideways right up to the beginning of the year, and ends up where we are now at 67.67. Okay, now Yum, I'm pretty sure we got the 67.5 and the 68.5. So this thing has to go above 68.5, which is right about here, there or higher for us to be, profitable. It's a good chance. I mean, she's at 67.67, and you see for the past week, okay, 1, 2, 3, 4, 5, 6 days, 6 days in a row, she's been above 68.5. So there's a good chance it's going to continue doing it that way. So that's where we are in the positions that we had. Now, these all filled this morning. Okay? Everything of these filled this morning. So I got $37,000 left to spend. So let's see what we can do today. I'm going to do just a couple of trades, see what we have, see what we're looking at. Now, I use the software. All right. And this is my weekly options right here. Oh, Coca-Cola is coming up. KO. See that? 89%. I like that one. All right. We already have HPQ. We already have Mark. I looked at Teva yesterday. Now Teva, I want to show you what Teva looks like and tell you why I didn't get into Teva. I'm going to take a look at Home Depot also. So let's take a look at Home Depot and we'll take a look at Coca-Cola. But I want to show you Teva and I'm going to explain to you why I didn't do Teva. All right, Teva's right here, 1.3 days in order to get in and out. But all the numbers look good. See, it closed at 35. The high was 59. The low was 31. They'll have 1 year target of 40. The dividend's 34 cents, and the yield, excuse me, is 3.8. So why didn't we do this one? I'm going to show you right now. Let's go to Teva. All right, here we go. Teva. Let's plot the dividend. Love my children, love my children, love my children. You ever do that? You ever get sick and your children makes you sick, but you're sick for so long you have to keep telling yourself, love my children, love my children. Okay, so anyway, here we are. Looks like a lot of ones. You got 1, 2. So this should make you feel warm and fuzzy. All these numbers look good. That should make you warm and fuzzy too. This chart right here also looks good because you buy 10 days out and it goes up. And here's the dividend here. It goes sideways for a little bit, but it goes up. See, it looks great if I just want to collect the dividend. No, but I want to get in and I want to get out. So why didn't I? Oh, I know why I didn't do this. Let's go to this chart here and see what this looks like. This is the 10-year chart from Yahoo Finance. Now, look, Teva 10 years ago was at $57. Okay, it went sideways for about half a year, then slowly downtrending. See this? Slowly going down. And now she's at 36. So she's at 55 10 years ago, and now she's at 36. Sorry, but that's going the wrong direction. No matter how often this thing hits its target, I don't want to take the chance of 10 years from now having a stock that's worth less. Okay, that's one of the reasons why I did it. Another reason why I didn't do it, let's go here. Let's put Teva in here, T-E-V-A. See, there's another reason right there. Starts out the year last year at 57.55, goes sideways for a couple of months, then slowly drops down, and then she continues to drop down, hits a low of 32, from 55 to 32 in 1 year. Sorry, I do not want to own that company. That's just one of the things, no matter what the software says. I mean, you can get in and get out in a day, but you're running the risk of the stock being worth less than what you want it to be. And that's the main reason why I didn't do it. Another reason was I jumped into here, put in Teva. Alright, Teva's been going sideways for the past month or so. Right now she's at 36.65. Okay, so 36.65, which is right here. I buy this. This is where I'm at. This is not where I was yesterday, because I would have done this one yesterday. Those numbers look good. All right. It's cost me $320, or actually $350, because I got $30 in commissions, and the most I can make is $180. Now, 180 is basically 50% of that. I love doing 50% trades. This is a 50% trade for 3 days. Wednesday, Thursday, Friday. You get 50%. But do I really want to take that chance? Because you saw... Oops, let's get out of here. You saw what the year chart looked like. She starts out at 57, almost to 58. And right now she's at 32? No, that's almost a 50% decrease in valuation. And I don't want to do that. So we're not doing Teva. I told you that, I didn't like it. Although the software says it looks good, you have to look at the trend where the stock price is going. If it's going sideways with a lot of movement, I can deal with that because it's going to be worth the same in 3 to 5 or 10 years. But this thing went from 70 something to all the way down to 30 something. So no, thank you. All right. Who else did I want to say I wanted to look at? I wanted to look at. Oh, that's right. Coca-Cola and Home Depot. So let's take a look at Coca-Cola and Home Depot. KO and KO. All right, now Coca-Cola, I can deal with this. She starts out the year right at 43, hits a high 47. That's only a $4 move. It's like a 10% move. She goes sideways for quite a while, right into end of July. Makes a big gap down to 43, which is basically where she started the year out. Sideways for a little bit, slow down trend, hits a low of 1129, which is the end of November, and then she basically goes sideways right up to where we are now, and she's at 41.46. So 41.46 is very close to here. So what I'm going to do, let's do 20 contracts of Coca-Cola. And I want to go 35, just up one. All right, now it's just going to cost me $760. Okay, $700 for the position, and then $60 in commissions. Okay, so for a total of $760. But the maximum amount of money I can make is only $300. Okay, but 300 is just a little bit less than 50%. So it's right around. I'd say 40%, somewhere in that area. So 40% for 3 days is not bad. So what has to happen? This thing has to stay above 41.50. Now she's 4 cents off of 41.50. Do I think it's going to go 4 cents in the next 3 days? Sure, why not? And if it doesn't, it still has a dividend coming up, and I wouldn't mind buying it. So what's going to happen is I'm going to end up buying it at 41.5, which is not bad where it is. So I'm going to do that one, and that gave me a trade for tomorrow. And Home Depot was the next one. So look at Home Depot. Home Depot. And Home Depot. All right. Now, Home Depot started the year last year at 123.68. Basically going up and down for a while. She hits a high at the end of May, in the middle of May at 137. Comes back down at the end of June at 126, back up to 138, makes a low of 119, and she shoots up to where she is now at 145.02. Now, let's go back and take a look at this again for a second. That makes me a little leery, because at 145.02, let's take a look at the 10-year chart on this one. It makes me just a little uncomfortable. Home Depot, right? So let's go to Home Depot. Home Depot. Plot the dividend. We're to the second week of March. All right. There we go. Let's get rid of that. Okay, so Home Depot, we buy that 10 days prior. She's going to sink a little bit right to the dividend. She's going to go up. Good for dividend capturing, but I'm not so quite sure if we're collecting the dividend right off. All right, so missed it in 2011, missed it in 2015, so that makes me a little queasy. She closed recently 143. The high for the year was 145. And the low was 118, a 69-cent dividend. It's a little bit less than 2% yield. Now, I don't like going below 2%, and this makes me a little uncomfortable. The high of the year being 145, and right now she's at 143. I don't like being at the top, because you never know where it's going to go. Here we go again. Excuse me. one more time I do my chant. I love my kids, I love my kids, I love my kids. They get me sick all the time. I hate that. All right, so 10 years ago, Home Depot is at 125. Sorry, that's 1 year. I want 10 years. All right, 10 years ago, Home Depot was at 37. Now it's at 145. So this is a good one to get in for the long term. And it's one of the dividend kings, I believe, increasing its dividend every year for the past 50 years. So these one, it might be one of those ones you just disregard some of the bad news and you just jump into it anyway because it's Home Depot. It's a great dividend stock. All right, so let's see what it says. Let's get out of there. Okay, so Home Depot is at 145. We can do the 143, 144, 78 cents. I'll only do 100 contracts. 10 contracts of those. So I'll make 220 off of 810. So that's a little bit more than 25%. So 25% for 3 days is not bad, as long as she stays above 144. Okay, she's at 145.02, which looks like the new high for this run. Do I really? I'm going to say no. It's too close. It's 25%. I don't want to be stuck. And the one chart didn't say it was going to continue to go up. I mean, it's not going to go up within the next 10 days. Historically speaking, she has not gone up. Okay? Is the dividend here? 10 days prior to the dividend, it's higher, and she drops going into the dividend play, but increases out of the dividend play. So I'm going to pass on Home Depot. You guys want to do that? Hey, that's up to you. But this is 9:30, 9:40. My throat is a little sore. I'm coughing, sneezing all over the place. So I think I'm going to be bugging out of this one. And I just showed you what I did this week. I think I might do another one probably Wednesday or Thursday. Oh, Wednesday. Tomorrow's Wednesday. I might do one tomorrow if I'm feeling better, just to see how progress is going. But I'm going to skip on Home Depot. It doesn't look, because I don't like, she gaps up. She closes at 143 yesterday, almost 143. Then for some strange reason, she opens up at 145. Why? Why the big gap up from 143 to 145? And apparently the public didn't think so, because she closed at 143.25. All right, that's it. I gotta go. Anyway, this is James checking out from the 10-Minute Trader. I will see you the next time. Hopefully, I'm feeling